basically, I saw three things we never see before. Number one, the liquidity coming up sharply. You saw the daily trading volume, and which is average this few days, this month, tripled of the last year average. Number two, the Chinese government openly and officially telling the investors, this is the time you can put money into the stock market. So after all the shorts be massively squeezed, the value investor for the first time after 5 years came out. So if you believe the previous high we saw in 2015 was 6,000 points, and it will be passed. It will be overtaking. It will be go beyond. How to say this word? I'm getting excited. You see, I didn't have such a feeling for so long time as a Chinese 30 years fund manager play in this stock market. So basically, the liquidity is the first thing. The policy is second thing. The momentum is third thing. We all see the three big elements are working together towards a bull market. So after the crazy bull, the mad bull, we will see the slowing, stable bull coming to play.
Right. Indeed, Yang. Why is it then that the markets reacted negatively to the housing policy measures that came out yesterday? Now, some would say that it was profit-taking because obviously the markets had rallied enough, but a faction of the market believes that the measures fell short of expectations.
Basically, the property sector has been suffered for so long. So basically, the government slashed or get rid of all the previous restrictions, bans on the buyer market and the Chinese stock market. And the 4 trillion renminbi will be injected into the property market to support the whole buyers in the coming months. So number one, investors, they have to be giving time to digest. This real happening or just gesture? Number two, they dirty cheap, the stock market, especially on the property market side. So you saw massive volatilities. So basically, we have to clean up the previous negative mood and negative news and to rebuild our buying attitude into the property market. And also, we have to see real numbers coming out. It's too soon to judge, whether there's real buyers coming to the secondary market yet, because there's oversupply and Beijing, Shanghai, Shenzhen, the 3 major cities. We only see slightly moving it towards the secondary market in the property sector in Shenzhen, yet. So basically, Beijing is the indicator. Beijing hasn't really moving yet. I came from Beijing. I know exactly what's the mood. It's wait and see, on the liquidity, whether real, money will be put in. Secondly, stock market, whether, after ETFs moving up, after, government money played a major role,
Right.
500 billion money already injected into Hong Kong to push up the Hang Seng Index into 5,000 points. There will be more to come.